Hi everyone, welcome to the November episode of Exits primarily through IPOs. So in the month of October, we are reviewing October in the month of November. We had got about 8 IPO filings, so a pretty active month in terms of PE/VC backed DRHP filings, if I may. And out of these 8, like 4 were confidential filings and 4 were basically normal filings per se. So the first company is a company called Shadowfax, which you might have looked at, heard of, or indirectly used it. So they are a tech-driven logistics platform. So basically, the way you receive couriers or your e-commerce deliveries from various shippers. So Shadowfax is one of such shippers. And an interesting fact, like I also used to wonder what does this Shadowfax mean? Like, where does this come from? So as we were doing this research, the founders give the credit to Tolkien, the writer for Lord of the Rings. So that's what they took the inspiration from, which is pretty interesting. In terms of the cap table over here, fairly colored cap table. There is Flipkart, there's Aequs, there is BVG NewQuest, Nokia Growth, IFC, Mirae, and Qualcomm. So multiple folks out on the cap table. In terms of the IPO size, this is a 2,000 crore IPO, of which about 1,000 crores is the primary issue, and up to 1,000 crores would be the OFS. Of course, this 1,000 up to 1,000 crores of OFS is calculated based on a market cap estimate. Our estimates from public sources that we gathered is about 8,500 crores of market cap. And the selling shareholders over here include like Flipkart is contributing about 24% of this, 8 crores about 20%. TPG NewQuest is taking about 15% of this, and then Mirae is taking another 14% or so. And then, of course, the other investors are also taking some parts or the other per se. In terms of the performance of this company, if you look at it, they did about 2,500 crores in FY25. So roughly, if they get a valuation of 8,500 crores, which is about $1 billion or unicorn, whatever you like to call it, their multiple would be somewhere around between 3 to 3.5 on a revenue basis. Their revenue growth has been impressive. Last year, FY25, they grew at about 32% YY, and on an 86% EBITDA, generated about 6 crores of PAT. So that's what is about Shadowfax. The next company is a company called boAt. I'm sure you would have looked at their ads, or you might have looked at the products that they sell. So they are primarily a consumer electronics brand. You would have seen boAt speakers, boAt headphones. They also have wearables, which is like your smartwatches that they sell. The primary appeal that they make is to the youth per se. Here on the cap table, you have Warburg, Fireside, Qualcomm, and Malabar. Interestingly, you would see like Qualcomm here. Today we are going to see Qualcomm is there on a multiple of companies on their cap table. So from a liquidity perspective or OFS perspective, a good year for Qualcomm, I would say, like at least whatever was filed in October, as these companies go through the actual IPO listings, whenever they go, it would be a good liquidity generation for Qualcomm. Their IPO size, which is a mix of fresh as well as OFS, is about 1,500 crores, of which fresh is about 500 crores, and the estimated valuation is about 15,000 crores. On that 15,000 crores, the OFS could be up to 1,000 crores. Here, Warburg, which is the name on the cap table, is South Lake Investment, is aiming to take off 50% of that OFS, which is 500 crores. And then Fireside about 15%, Qualcomm about 50 crores, and promoters are taking about 30% or 300 crores. In terms of performance, they did about 3,000 crores in FY25. And in terms of PAT margins, they did about 61 crores on an EBITDA of about 125 crores. The price to the revenue multiples would be about 5 times or so. So that's about boAt. Meesho. Now, this is a company many of us have used for when we want to order a multitude of products which we need in our homes for various things. May not necessarily be apparel, but small things that you need, let's say for decoration or some other stuff. But the way Meesho started was that It was called, like, the inspiration I think was Mary Shop, wherein everybody who has a smartphone could think of themselves as a shop owner. And where does this shop exist? This shop exists on the online or the World Wide Web in the form of an app, and they would make consumers available to these shop owners or digital shop owners through various social media and its own marketplace per se. So it's essentially about empowering millions of small businesses in the country and help them flourish in their lives. So a great, I think, objective that they were chasing, or are rather chasing. In terms of investors on the cap table, here you have Peak, Elevation, Naspers, SoftBank, Westbridge, Fidelity, Y Combinator. So a very interesting cap table. Here, the size of the IPO issue is about 6,750 crores, of which fresh issue is about 4,200 crores or so. And the market estimated valuation is about 60,000 crores. Hence, on that, the OFS component could be about up to 2,500 crores or so. Elevation is looking to sell about 33% of the OFS. Peak is looking to fill about 18% of the OFS. Venture Highway, which is now under General Catalyst umbrella, is looking to sell about 9.4%. And then there are others who are summing up to roughly about 15-20%. And then promoters are looking to sell about 14%. So in terms of revenues, FY25 they did about 9,400 crores. They still burn money at an EBITDA level. In FY25 they were at about minus 68 crores or so, and PAT is minus 4,000 crores or so in terms of FY25. Of course, like, these companies keep on improving the results. In their DRHP, I think they would be filing up for their Q1, Q2 results, which would be probably better than FY25 was for sure. The next company is Duroflex. Like, we had covered a mattress or a sleeping company called Wequid in an episode which we ran like a few months back. This is a legacy company in the sleeping space. Of course, they manufacture and sell mattresses, pillows, and various bedding accessories. Interesting piece is that this is a company which started almost 5 decades back. They started off in 1963, wherein the founder, P.C. Matthews, started off in Kerala with a simple mission that India should be able to sleep better. Here on the cap table, you have Lighthouse and Norwest, a small issue size of about 750 crores, of which fresh issue is about 150 crores. The market anticipated valuation is about 2,600 crores. Hence, on that, the OFS size could go up to 600 crores, of which Lighthouse is looking to take off about 42%, and promoters are trying to take about 58%. The revenues of this company in FY25 were about 1,130 crores. So price to sales of about 2.5 times. The company has been growing at a small rate of about 4% YOY. That's what they grew in FY25 versus FY24. The PAT margins are very healthy. On about this 1,100 odd crores of revenue, they do about 47 crores of PAT on an EBITDA of about 98 crores. That's what Duroflex does. The next company is into the medtech space. So they basically are into devices and diagnostics for cardiovascular and vascular diseases. They have a strong R&D and manufacturing capability both in India as well as Europe. Investors on the cap table here are Everstone and India SME segment. The IPO size is about 3,000 odd crores, of which fresh issue is about 900 crores. The market estimated valuation is somewhere between 11,000 crores to 13,000 crores. And if that happens to be the OFS component or the liquidity component, is going to be between 2,200 to 2,600 crores. Now, consistently, if you're seeing is that the OFS piece or the liquidity piece in most of the IPOs is larger than the primary component. And this is more true if the company is already profitable. Because like IPOs, of course, help companies raise primary capital, but they also serve as a great way to provide liquidity to investors. In some cases, even founders want some liquidity for their future personal needs. So that's what you would see consistently as a theme for profitable companies. In terms of revenue, Integris did about 1900 crores of revenue in FY25, grew 22% YOY, and generated a PAT of about 71 crores on an EBITDA of about 300 crores. Now, the delta between EBITDA and PAT, of course, this is a manufacturing company, so there would be depreciation that would be sitting on the books. If they have taken loans, there might be some interest costs and so on. Roughly, like the estimated valuation is about 6 times revenue and an EBITDA multiple of about 40 times. The next company is a company called BVG India. So they are an integrated services player. So in simple terms, they run facility management, waste management, emergency response, and various energy solutions across 180 plus cities and have an employee base of about 85,000 people. So you would see like the facility management services or some canteens that are run like in one of my previous organizations. BVG used to run the canteens in the organization per se. So that way is pretty widespread company, and the roots of this company lie wherein the founder of this company called Hanumantrao Gaikwad basically started this to create jobs in his village. That's as simple as where he started. Started off with about 8 people, put them in various places and various jobs. And today this company has about 85,000 people. Now you could think of them like a parallel to them could be somebody like a Quest Corp or somebody who basically helps in terms of providing people to the needs of various corporates. The investor here on the cap table is 3i Group. The IPO size here is 2,300 crores. The fresh issue or the primary issue is only 300 crores. So 2,000 crores of liquidity is being generated in a 2,300 crore IPO issue size. And 3i is looking to take off about 62% of this, promoters about 12.5%, and others are looking to take about 25%. In terms of scale, they do about 3,300 crores of revenue, on which they generate about 200 crores of PAT on an EBITDA of about 380 crores. Multiple perspective or valuation perspective, this is happening at about 2 times revenue and about 16 times EBITDA. On PAT multiple, they would be somewhere closer to 30 times or so. The next company is a company called Aequs. It is basically a precision manufacturing company serving global customers like Airbus and Boeing. They are based out of an aerospace SEZ sitting out of Belgavi. Here on the cap table, there is Aequs Capital Partners. Interestingly, we also have a play in the precision engineering space. We have a company called Ethereal Machines, which does precision engineering jobs for industries such as aerospace, defense, medical, and so on. And given the entire focus around manufacturing, a lot of companies are doing a lot of interesting stuff in this space. In terms of the IPO size, this is about a 1,500 crore IPO, 1,470 to be precise, of which half, about 720 crores, is a fresh issue. And the remaining about 730 or 750 odd crores is the OFS component, of which Aequs is trying to put across about 86% of this OFS. The estimated valuation, this amount that we calculated for the OFS component, is based on an estimated market capitalization of about 3,000 odd crores. In FY25, the company did about 900 odd crores, on which they have been PAT negative. And the revenue growth also has been on a southward trend. Maybe a one-off year, like we haven't dug deeper into it. So on revenue multiple basis, this is being priced at about 3 times. If this pricing happens, what is being discussed in the markets right now. The last company which filed for with their DRHP is a company called Parijat Industries. So they basically develop and manufacture various agricultural inputs such as pesticides, insecticides, herbicides, and fungicides. British International Investment BII sits on the cap table over here. The total IPO size is of about 560 crores, and the fresh issue out of this is 160 odd crores. The estimated valuation is at about 1,500 odd crores. So the OFS component with that would be about 400 odd crores. Of this 400 odd crores, 70% is what BII is looking to sell, and promoters are looking to sell 20%, the remaining about 10% or so. The revenue of this company is about 1050 odd crores, on which the PAT is about 54 odd crores. So being priced at about 1.5 times revenue, and the earnings multiple or the PAT multiple of about 30 times per. So those are the 8 companies that are PEVC backed and have filed with their DRHPs. A strong pipeline. I'm sure this is their IPO listings may not happen this year, because from DRHP filing to listing, depending on how you're filed, confidential or public, it takes anywhere between 3 to 9 months in best case scenarios to go and list. Yeah, so that's quickly on the DRHPs per se.